and welcome. You're watching The Money Show. I'm Kavita Thapliyal, and this show is your one-stop personal finance guide where we guide you on each and every financial goal of yours, be it your child education, your retirement, your abroad travel, or anything related to your finances or your investments. We have your back because on this show, we not only discuss about various investment instruments, we also give you the right kind of strategy where not only you can align your investments with your financial goal, but also have a hands-on approach on your finances and on your investments. This show is also a place where you can send across your portfolio queries just in case you want to ask anything about any aspect of your investment or investment strategy. Send across your queries on our WhatsApp number. You can also email us your questions. The details are flashing on the screen, and we will get you connected with our experts or even do your life financial planning on the show. So let's begin the Money Show, and we'll start with a very special discussion today. The beginning of the month often marks key financial activities, salary credits, bill payments, and planning expenses. But just as we plan for our expenses, it's equally important to plan for our investments. To encourage this habit, SBI Mutual Fund, in collaboration with Times Network, is launching a nationwide investor awareness initiative, Bharat Nivesh Bhetar Kal. The objective of this initiative is to promote the habit of consistent investing among Indians, helping them secure their financial future. As part of the campaign, we observe 4th of every month as a monthly reminder to ensure that you start your mutual fund SIP or ensure your existing SIP continues. So go on, set your reminder to invest consistently and stay committed to your goals for the financial well-being of your and of your loved ones as well. So let's begin. And today the topic in focus is investing in sectors or themes. Now, if at all you are someone who's looking for this kind of an exposure in your portfolio via mutual funds, is it the right time? What themes should you be focusing on? And also, have you graduated enough in your investment journey to have a sector exposure? Let's decode all of this. I have with me Tarun Birani, founder and CEO, TBNG Capital Advisors. Tarun, hi, good evening, and welcome to the Money Show. A very important discussion, and we've seen a lot of interest coming in sector and theme specific investments from the investors as well. But let's start with the basics. I want you to explain our viewers or our investors, what is that stage in an investment journey when you can have a sector or a theme specific exposure? Tarun.
Good evening, Kavita, and thank you for having me here. And I think it's a very important topic which you brought in, that when can you start looking at tactically things, right? I think what you are trying to mention is the themes, trying to get outsides return, and all those kind of theories should work at a very different phase. So let me give my perspective. So I strongly believe there is a pyramid, and that pyramid starts with safety pyramid, stability pyramid, and the aspiration pyramid. And each pyramid in your financial planning life are very, very critical for us. And I think a balance of each is very important. Safety is something you want to make sure that you are not poorer than what you are. So you need to have a good 12-month contingency. Stability is something you want to take care of your children's future, your retirement, building a passive income, or any other goals which you have in mind, which are 10-15 years away for you. And there you look at something which can beat inflation and give you better than market returns. I think that is what you are targeting in the stability goal. And in the aspiration size is where, once your safety stability is taken care of, the money which is available apart from that, there you can look at taking risk, because you can take more concentrated bet, and there you can look at making more returns. So to your specific question, which part of your life you should start looking at this thematic, tactical, or the news base, or any other items which you want to pick up because your friends or others have made outside money, I feel that should be aspirational. You should ensure your safety and stability block, your retirement, your children, and all these things are very well positioned in a core diversified structure. Then you can look at more thematic structures.
All right. But then let's also
Yes,
discuss
Kavita.
about, sure. So now since we've discussed about the investor type or investor appetite, when they want to invest in sectors and themes, what exactly are we talking about? What are the themes and sectors the market is preferring right now or which are trendy in the market right now?
Right. So again, I'm not a very strong believer of looking at things sectorally, but
Sure.
I understand it's very important to understand what is working right now. So just to give you a breakup, last 1 year has been a flat year for the markets. Talking about stock markets. So Nifty and Sensex both were flat, and I think rightly so, because the valuations were high. There were a lot of geopolitical issues happening. There were a lot of developments happening. So we have seen market has been more or less flat. On this backdrop, if I look at last 1 year, the sectors which have not done well, energy sector is down almost 18-20% on an index level. FMCG is down almost 16% on an index level. FMCG index. The IT index is down 17% on the backdrop of all your H1 news, or all the other news of deglobalization and all these news coming in, AI development happening. Reality sector is going through minus 20% in last 1 year. So there has been, these big sectors have taken big beating in last 1 year. If I look at banking and PSU, these were two sectors which have done well in last 1 year. So largely, if I look at sectorally, there is a lot of contra play. If anybody wants to look at energy, IT, FMCG looks good to me, because which has not done last 1 year well. I think there is a very good chance. And looking at Indian structural story now, let's come back to Indian story. If India has to become a 10 trillion or a $15 trillion economy, I think which are the sectors which are going to propel India to reach there? If I look at, India has a lot of sectors which have strength, like auto ancillary, talking about IT, cyber security, renewables, travel and tourism. And apart from that, I think the big large theme is consumption, according to me. Consumption looks like one of the very large theme which will take India to that 10-15 trillion dollar economy. Again, infrastructure and all these are enabling sector which will help us. So if specifically, if I have to look at sectors which are looking promising, is consumption and FMCG as we talk right now. As the inflation is in control, the CPI for August was 2.1. Again, the recent GST cut has brought in almost 1 lakh crore extra money with the consumer, on the back of income tax break and all the other stimulus government is trying to bring in the consumption. We see a lot of discretionary spending like QSR, fashion, beauty. All these things will looking very good. But again, you have to look at valuation. The Nifty consumption index is currently trading at 41 times, 8 times the book, which we feel is a very stretched valuation. It's not a very a cheap valuation which one is looking at. But again, due to the growth prospect and looking at the government push towards this sector, one can look at consumption and FMCG. Oil and gas, I feel, because it has not done last 1 year, and again, looking at the importance of oil and gas in the larger scheme of things currently in the geopolitical environment we are in right now, I feel this sector also is looking very promising. Power is one sector which I feel, due to the data center demand, at the pace at which the energy demand is required in next 3 to 5 years, I feel energy and power looks to be a very promising sector. And any country, any state which has strength in that, any companies which are helping there, are going to be the large beneficiary. Defense is again, due to deglobalization and due to the conflicts currently happening, defense and PSU sectors are also looking very promising. Again, but one need to look at valuations. Valuations are very stretched there. Private banks, if I look at, is also looking extremely positive to us, because the environment we are in right now, inflation is going down, interest rates are going to come down in that environment. And again, government is trying all the consumption push, due to which again the lending demand should come up. So if all these levers come up, I think the private banking story also looks very promising. And again, valuation doesn't look very stretched there. So again, one can look at private banks as a story also in the current environment. Apart from that, metals, we have seen a very large rally happening in gold and silver. Metal sector largely looks positive. But again, from an infra side, I feel cement and steel. Cement is looking extremely attractive to me right now as we talk, because there is a lot of consolidation in the companies happening in this sector right now. So that sector can also do well. So from a sector perspective, there are quite a lot themes where one can look at. Yeah.
All right, so a lot of options for investors to consider, but a lot of exposure they might already get through a well-diversified mutual fund as well. Now, having said that, I also want to focus a bit of conversation on the risk aspect of it, because it's cyclical, it's very news-based, and any negative news can have a deep impact because it's a concentrated exposure that you have in a particular sector. So news flow is very important. Also the momentum, for how, if it is a positive momentum, like for example, consumption or consumer discretionary that we are talking about, we've not seen this particular sector run in last few years, but then now the narrative is such that we will see this running, or the momentum is very positive and is likely to continue for a couple of quarters as well. Now, having said that, I want you to analyze the risks for us, and also how do you mitigate, or how do you put a filter on the exposure if you might have through a well-diversified mutual fund, because even the fund managers would want to make the most of these sectors or themes which are really playing out in the market now.
Right. So talking about the risk, and I feel it's a very important conversation, that risk is very important, and one need to be aware of 5-6 risk you build up when you take thematic or sectoral play into any specific sector. Okay. So first and foremost risk is the concentration risk. Concentration, and just to give you some example, so like in the Nifty PSU bank index, almost 32%, 34% of the weightage is in a single stock called SBI. Okay, in the reality index, top five names make up almost 80% of the composition. So one stock or a management event can swing the entire fund. Again, largely if you look at this consumption and sector, these are largely very concentrated play. So I think one need to have a very high risk appetite, which part of life you are in, what stage of money management you are in right now. All those things matter a lot, what kind of risk profile you have. So decide based on that, on the concentration. Another very large risk which these thematic and sector fund run is policy risk. We have all seen, right, suddenly with the GST cut, as well as the income tax break and the government stimulus, the consumption sector is looking extremely positive right now. This is largely a policy action which government has taken, which has enabled this sector is looking very attractive. At the same time, if I just look at a last 1 month news flow where government has put a ban on online gaming industry. Again, this is a very classic example. If somebody is invested in a theme which is related to gaming industry in India, I think you would have completely lost your money in that part, right? So this is very important, and one need to be aware, unlike a diversified structure where there are 10-15 sectors, 5 sectors are there, the thematic fund or a sector, the sector fund will have more single sector, right? So you run a very high risk of the policy risk. So one need to be extremely updated. We need to be aware what is happening in that sector. And if you have a very high conviction, then only one should look at. Again, defense and PSU, we have largely seen closer to budget. We have seen these sectors timing and people plan, right? So I think that is also something very, you have those tactical skills at play or not, should decide whether you should look at investing. Again, recently US has decided to put $100,000 fees for the H-1B visa, right? I think that in itself has overnight changed the sector sentiment for the IT sector. So you can see the policy risk is again a very large risk one is running when they're investing in sector fund. Again, cyclical nature as well as timing, that also plays a very large in sector fund. Again, you can see pharma is the best example. Between 2014 and 15, pharma fund AUM grew 69%. But from 2015 to 18, Nifty Pharma Index has delivered minus 12%. Again, investor piled on the top, then suffered 3 years of negative return. So you can imagine that timing is very critical, and one should be having a very deep knowledge in that sector. Then only one should look at. Again, one very large risk is the liquidity risk, because many sector and thematic fund put large money in mid and small cap stocks, which may not be the most liquid names in the market. So in a drawdown kind of situation, we have seen panic can happen in these sectors, right?
Right.
So exit doors become very narrow. So if you're
Exactly.
looking at liquid portfolio, maybe a sector fund may not be the best thing one should look at. So I
Absolutely.
think apart from that, your behavioral, many investor gets trapped in emotions, greed at the peak and fear at the bottom level, right?
Right.
I think that is where sector need a process, not just conviction. If you don't have a process in
Right.
place, my suggestion is please avoid it.
Right, right. So a lot of checks and balances to be factored in, but yes, a diversified portfolio is the right way to go around it. Thank you so much, Tarun, for being on the show and helping our viewers navigate through this particular exposure and strategy in their portfolios today. Thank you so much.
Thank you. Thank you very much.
All right, we'll stop for a quick break, and after that break, we'll be joined by Anil Rego, who will be answering your portfolio queries for us.